Good evening, everyone. Vanisha, Zainab, and Labiba. Please confirm if I'm audible to all of you or not.
Yes, sir.
All right, then. So, all right, everyone. So, in last class, we were talking about the rules of debit and credit. We were doing this chapter. This is the third chapter as per our syllabus. Previous chapter was the accounting equation, and this is the third chapter as per the syllabus. So, in this chapter, up till now, we have discussed the meaning of the accounts, wherein I've told you that accounts is a summarized record of transactions at one place. Accounts can be broadly classified into there are two approaches of classifying the accounts, right? One is the modern accounting approach, and then there is a traditional accounting approach. Modern accounting approach says that accounts can be broadly classified into 5 categories. First is the asset, liability, then expense, revenue, and capital. But as per the traditional accounting approach, there are 3 types of account: personal account and impersonal account. Impersonal, which is further divided into 2 categories: real account and nominal account. Then we did few questions based on the classification of item into different categories based on the modern accounting approach. We did 3-4 questions based on that, and then after this we understood the different types of account on the basis of traditional accounting approach. We were doing this in the last class, wherein I've told you that there are 2 types of account: personal and impersonal, and under impersonal we have nominal and real account. So nominal account is an account which basically deals with the losses, expense, and income or gain. And real account deals with all kind of assets, right? Every asset account is considered as a real account. But real account does not include these accounts like the bank, bills receivable, debtors, prepaid expenses. All these are not included in the real account, even though these are assets. Then we talked about the personal account. Personal account means all accounts which are related to liabilities. So creditor, bills payable, outstanding expenses, all these are liability and therefore considered as the personal account as per the traditional accounting approach. Personal account generally include the liability accounts only, but there are certain assets which are also kept under this category, like the bank, bills receivable, debtor, prepaid expenses. All these are also considered as the personal account. And we did few questions based on the classification of various items in the as per the traditional accounting approach as well. So we did these questions in the previous class. I hope everything that we discussed in the last class is clear to all of you. Please confirm if it is clear or not. Tell me any doubt, Labiba, Vanisha, Zainab. Okay.
No, sir.
All right, everyone. Now let's talk about the rules of debit and credit. All right. So just a minute. Give me a moment. So in today's session, we will talk about the rules of debit and credit. And in order to understand the rules of debit and credit, you must be you should be aware about the topics that we have already discussed in this chapter. I mean, you must have the idea about the accounts, the different types of account as per the traditional accounting approach and the modern accounting approach. And only then these rules of debit and credit you will be able to understand. So let me start with the rules. Since you already understand different types of account on the basis of traditional and the modern accounting approach. So the rules that I'm going to cover right now is the rules as per the modern accounting approach. All right, so rules of debit and credit, just a minute. Rules of debit and credit is broadly classified into two categories. Rules depends upon the approach we are following, whether we are following the modern accounting approach or the traditional accounting approach. On the basis of that, the rules is classified. So when it comes to the modern accounting approach, the rules are different. Modern accounting approach. And when it comes to the traditional accounting, the rules are different. Traditional accounting approach. So we need to understand the different types of account based on the traditional and the modern, and then only you will be able to understand the rules of debit and credit. So since we already understood the different types of account on the basis of traditional and modern accounting approach, so therefore I think it will be easier for us to understand it now. All right, so let's first of all talk about the modern accounting approach. So modern accounting approach gives us the rule regarding the asset. The first rule is regarding the assets. First rule is regarding asset. What does the modern accounting approach says for the asset? For the asset account, modern accounting approach says whenever there is an increase in the asset, whenever there is increase in assets, we should debit the asset account. Asset account should be debited. That is what the rule of debit and credit is regarding the asset. When there is an increase in the value of the asset account need to be debited. Whereas whenever there is decrease in the value of the asset, asset account will be credited. So this is rule number one. The rule one was given for the asset account. All right. So whenever, see, let me before telling you the various rules, let me also show the format of the account. Just a minute. Yeah. See, this is how we prepare the account. Everyone, please focus and try to understand. This is the format of the account. On the while preparing any account, we prepared 4 columns. First is for particulars, then amount, then again particular and amount. So there are 4 columns in any account. So these 2 items or these 2 columns are considered as the left side of the account, and these 2 columns are considered as the right side of the account. So this is the right side of the account. This is considered as the left side of the account. All right. And left side is also known as the debit side. And right side is also called the credit side of the account. But any account contains 4 columns, particular amount and particular amount. First 2 columns from the left side indicate the debit side, and second 2 columns of the left side considered as the credit side of the account. All right, so this is how we prepare any account. If you are preparing an asset account, the liability account, creditors account, reserve, anything, bank account, cash account, every account will be prepared like this. We will first of all put the heading like let's suppose we are preparing a bank account. We will put up a heading here, bank account. And here we will be writing credit side, and this will be our debit side. All right. Tell me everyone, the format of the account is clear. Left side, right side. This is considered as the debit side, and this is denoted by DR. Debit side is denoted by DR for debit side. And this debit basically means the left side of the account is considered as the debit side. This is it. Left side of the account is considered as the debit side. Whereas the right side of the account is considered as the credit side, and credit side is indicated by CR. All right. Credit means right side of any account. I hope this point is clear, everyone. Please confirm if it is clear or not.
Yes, sir. It is clear.
All right. All right. Coming back to the discussion of rules regarding debit and credit. The first rule is given for the asset. What does this rule say? As per modern accounting approach, it says that Whenever there is an increase in the value of the asset, we should debit the asset account. And whenever there is decrease in the value of the asset account need to be credited. This is it. Moving on to second account as per the traditional accounting approach. Which is the second account as per the modern accounting approach? We have a liability account, right? Sir, what is it? What is the rule regarding the liability? Liability. For liability, modern accounting approach says whenever there is increase in liability, we should credit the liability account. And whenever there is decrease in liability, we should debit the liability account. Don't you think this is the rule regarding liability is completely opposite of the rule of asset? Is that clear? Rule of asset, what does the rule of asset say? Rule of asset says whenever asset increases, we should debit the asset account. Whenever asset decreases, we should credit the asset account. Whereas rule regarding liability says whenever there is increase in liability, we should credit liability account. Whenever liability decreases, we should then debit the liability account. Got it? Everybody is clear about this? Please tell me if it's clear or not. So
Yes,
you
sir,
can
it is
clearly
clear.
see the rule regarding the liability is completely opposite of the asset account. So this way it will be easier for you to remember. Once you remember the asset rule, you will definitely be able to remember the liability rule itself. All right. Coming to the next rule. Next rule is regarding the revenue. Next rule is regarding the revenue. And let me write it here. Rule regarding liability, what does it say? Whenever it, just a minute. I'm writing the rule regarding revenue just in front of the liability because it is going to be similar. Rule regarding revenue is also similar to the liability. It says that whenever revenue increases, increase in revenue means increase in gain, profit. This should be credited. Revenue account should be credited whenever revenue increases. Whereas when revenue decrease in revenue, then in such a situation, we should debit the revenue account. Right, everyone? See, liability rule regarding liability and revenue is completely same. But rule regarding the asset and liability is completely opposite. If you remember the rule of asset, you will be able to remember the rule of liability as well. And since the rule of revenue is same as the liability, so if you remember any one of the rule, either the revenue or liability, you will definitely remember the other one. I hope this point is clear, everyone. Please tell me if it is clear or not.
Yes, sir.
It's clear. Okay. All right. Now let's talk about the fourth item. Fourth one is expense. Rule of expense is exactly similar to the asset expense account. Rule of expense account. So rule of expense says that whenever there is increase in expenses, then expense account should be debited. And whenever there is decrease in expenses, expense account should be credited. Got it? See, this one is same rule for asset and expense, same rule for liability and revenue. And opposite rule for asset and liability, opposite rule for expenses and revenue. Got it, everyone? I'm making it more relatable so that it will be easier to remember. Right, everyone? Is this clear? Anybody's having
Yes,
problem
sir.
understanding this? Okay.
No, sir, it's clear.
It's clear. All right, then there is one more account left now. Apart from asset, liability, expense, and revenue, there was one more account as per the modern accounting approach. Sorry, yeah, modern accounting approach. Anybody
Capital?
able? Yes, capital. Capital account is also. So capital. Fifth account is capital. What is the rule regarding capital? Rule regarding its capital is exactly similar to the liability. Exactly similar to the liability. That means whenever increase in capital increase in capital, we should credit the capital account. Whenever there is decrease in capital account should be debited. So capital account will be debited whenever capital reduces, and whenever capital increases, it will be credited. So don't you think the rule regarding the liability, rule regarding revenue, and rule of capital is exactly same, right, everyone?
Yes, sir.
So
Yes, sir.
if you remember only one point, either you remember the rule of revenue, liability, capital, you will be able to remember all rule for the other as well. And if you remember the rule for the asset, the same is applicable upon the expense. The rule of expense and asset account is same. And for the liability, revenue, and capital account, it is same as well. Got it? I hope this point is clear to all of you. And
Yes,
if it is
sir.
clear, so let's, I'm just giving you some time, please note this down. Then we will do a quick question evaluating your overall understanding of this topic. So let me just switch to the previous slide. Yeah, please everyone put this heading on your notebook. Rules of debit and credit as per modern accounting approach. See, I have already told you that rule of debit and credit depends upon the approach of accounting. If we are following the traditional accounting approach, we have a different rule. And if we are following the modern accounting approach, then rule will be differently applicable. So right now we are covering the rules of debit and credit as per the modern accounting approach. So what does the modern accounting approach basically say? Says that whenever asset increases, just debit it. Whenever asset decreases, credit it. And same rule is applicable for the expense account as well. Whenever expenses increases, debit. Whenever expenses reduces, credit. And for all other types of account, liability, capital, revenue, same rule is applicable. That means whenever liability increases, capital increases, or revenue increases, just credit it. And whenever all these things decreases, just debit it. I hope this point is clear, everyone.
Yes, sir. It's clear.
All right, everyone. Now, please put this heading on your notebook and start writing it. And as soon as you are done, just let me know so that we can move to the next slide. Because you also require to note that down as well.
Done, sir.
Done, everyone else. Vanisha, Zainab, Ritika.
Yes, sir.
Ritika, this is your first class, no?
Yes, sir.
So you already have some idea about this chapter.
Yes, sir.
All right then. Just let me know whenever you are having any problem understanding anything.
Okay, sir.
Because this is the third session of this chapter, so you have missed a lot of section of this chapter. I'm sure that you will face some difficulty understanding it. But If you are comfortable, it's okay. And if you are having any doubt, please let me know. Moving on to the next slide, please note this as well. These rules apply to revenue account.
Sir, I'm done.
Done, sir.
Everybody done?
Yes, sir.
Yes, sir.
Okay. One last rule regarding capital.
Done, sir.
Done. Okay. Done, everyone. All right.
Yes,
Let
sir.
me give you a quick recap of everything that we discussed until now. See, we are discussing rules. Rules of what? Rules of debit. When a particular account should be debited and at what time we should credit a particular account. So we are covering those rules. And the rule of debit and credit says that rule depends upon the type of accounting we are doing. Whether we are following the modern accounting approach or the traditional accounting approach. So right now we just understood the rules of debit and credit as per modern modern accounting approach, wherein I've told you that for asset and for the expenses we have same account, we have same rule, and for all other type of account like the capital, the liability, and for revenue we have same rules. So for expense, for asset and expenses, rules are very simple. Rule says that whenever these as either asset increases, whenever asset increases or expenses increases, we should just debit the asset or expense account. And whenever these things decreases, whenever there is decline in the value of the asset or expenses, we should just credit it. But on the other hand, rule regarding capital liability and revenue says that whenever capital liability or revenue is increasing, what we should do, we should just debit it. And when it is decreasing, we should credit it.
So it should be, when it is increasing, it should be credit, right?
Sorry.
So when it is increasing, it should be credit, right? For capital, liability, and revenue.
Yeah, whenever capital and liability. Yeah, I'm sorry. Just a minute. I did this. Whenever there is increase in the capital liability or revenue, we should credit it. And whenever the capital liability or revenue decreases, we should debit. So you can see it is just opposite of the asset and expense rule. I hope these points are clear. So let's do a quick question based on it so that it gets more clearer. All right. So yeah, It says on which side will be the increase in the following account will be recorded. We need to just tell the side on which these changes should be recorded. On which side means on which side of a particular account. All right. So question is saying that on which side will be the increase in the following accounts will be recorded. So question specifically said that these accounts are increasing. So considering that these are increasing, on which side of a particular account these items should be recorded. So let me just do this question and then I'll give you one question for you to solve. Just a minute. Let me show you how this is done. First of all, I'll write down statement showing classification. Classification as per modern accounting approach. I want all of you to write this down along with me. Nature of account, then the name of account, name of account, nature of account, effect taking place, and on which side we will record the item. Name of account, nature of account. Okay. We have to make a separate column for this. And all right, coming back to the question. The first item in the question is furniture, right? Furniture. Furniture. So tell me, furniture is what? Furniture. Sir, furniture account is what kind of account? Tell me. It is an asset account, liability account, capital account,
Asset.
expense or revenue. Sorry?
Asset account.
Asset account. Correct. And since the question is saying that the value of the furniture is increasing, question itself says that the value of the furniture is increasing, right? Value of furniture is increasing. All these accounts are increasing. Question says that in the very beginning. And then asking us how these accounts will get affected. So if the furniture account is an asset and if asset increases, what do we do? Tell me. If asset increases, what should we do? Whether we should write this on the debit side of the account or credit side?
Debit side.
Debit side, correct, perfect. Debit side. On the debit side of the furniture account, we'll record that debit side. Got it, everyone? Is this clear? Yes or no? Is this clear?
Yes, sir. Yeah.
Yes,
Yes,
sir.
sir.
Okay, let's move to the next item. Next item in the question was capital by Mohan. Capital, and question is saying that capital is increasing at the very beginning. See, every item is increasing in this question since it is already specified at the very beginning. We just need to tell on which side on which side of the account we should record if these items are increasing, right? So capital is increasing. So if capital is increasing, first of all, capital comes under which account? Capital comes under capital itself. There is no special category for capital. Capital covered under the capital account itself, right? Capital account. And since the value of the capital is increasing, tell me what is the rule regarding the increase in the capital? Whenever value of the capital increases, what should we do?
Credit.
Credit it?
Credit, sir.
Yes. Credit. Credit. Done. All right. Now, third item. Third item is salary account. Now, guys, tell me salary is what? What do you think? What is salary? Salary is an expense, revenue, asset, liability. What?
Expense.
Correct. Perfect. Salary is an expense. So, salary will be because it is an expense account and expenses are increasing. What did I tell you about the expense? Whenever expense increases, what should we do?
Debit.
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 Perfect. Very good. Debit. It should be debited. Debit. All right, everyone is clear about this. Anyone having any problem understanding this? Please tell me.
No, sir.
No,
It's
sir.
clear.
It's clear. Okay, very good. Just a moment. Okay. Now the fourth item. Coming to the fourth item, it says purchases. Tell me, what do you think? What are purchases?
Expense.
Expense.
Perfect. Expense. Purchases are obviously expense account. Expense account. And purchases are increasing. That means expenses increases. So expense account should be debited. They will debit the expense account. Is it clear? Please tell me if it is clear or not.
Yes, sir.
Yes, sir.
Okay.
It's clear.
All right, very good. Now, you guys are writing this now along with me in your notebooks.
Yes, sir.
Please write this in your
Yes,
notebook. along
sir.
with me. Then we have the sales account. Anyone have any idea what is sales account? Ritika, do you want to tell me what is sales account?
So revenue.
Perfect. Sales account is a revenue account. That's correct. So sales is comes under the revenue account. And what is the rule regarding revenue? Whenever revenue increases, what should we do?
Credit.
Revenue is increasing. Whenever revenue increases, what should we do? Tell me. Anyone?
Credit.
Credit. Very good. Credit. See guys, I'm not doing anything on my own. Everything is already specified. The rule is given to us already. We won't do anything on our own. Everything is given. We were already provided with the rules, and according to the rule, we need to treat every account and every item. You will just have to at the beginning of this topic, initially you will have to refer back to the rules, but as we proceed, you won't be required to refer to the rules. All right, these rules, you'll gradually these rules you will be thoroughly what should I say? You will be able to remember these. You don't have to put extra for remembering these things. Interest paid account. Now it's interest paid. So obviously, if you are paying interest, it is an expense, no? It should be an expense. Is that correct? Interest paid account is what? It is an expense. Is that correct? So if it is an expense account, means expenses are increasing. What should we do? Debit. Perfect. Coming back, then we have Sohan. Sohan is a creditor. Question says that seventh item is Sohan, and Sohan is a creditor, and creditor is increasing. So first of all, tell me, creditor is what? Creditor is an asset or liability?
Liability.
Liability. So that means creditors are liability account, and if liability account increases, we should credit the liability account. Is that right?
Yes, sir.
It should credit it. One last item is left. Just a minute. One last item, item number 8. Item 8 says Ram, that is debtor. Debtor is increasing, and debtor are what? Debtor is
Assets.
asset. Perfect. It is an asset. So asset account is increasing. What rule is applicable in this case? Asset account would be debited whenever it increases. So debiting. Debit. All right, everyone, is all these points are clear to all of you? The treatment is simple and
Yes, sir.
it should be clear. I hope it is clear. If anyone having any doubt, please tell so that I can further elaborate these. Otherwise, we'll move to the next question.
So I have a doubt.
Yeah, please tell me.
So I understand these rules of debit and credit, but is there a reason why this is debited and why it is credited?
Sorry, so Ritik, I'm not able to get your question. So could you please speak a little louder?
Yes, sir. Is there a reason why a particular account when increases is debited and decreases is credited? Is there a reason?
There is no specific, see, this is a rule of accounting and we need to just follow the rule. There is no specific reason why a particular thing is being credited. We have prepared some rules, and depending upon rule, we will be recording the item in different types of account. So it would be better if we remember these rules.
Okay, sir.
So there is no specific reason why a particular account is credited, only because there are rules prepared in the accounts, and according to the rules, we need to treat every transaction. So whenever asset is increasing, you should in fact ask why a particular account is getting debited or credited, because there is a rule. And that rule specifies, that rule tells us that whenever asset increases, we will be debiting the asset account. Therefore, we are debiting the asset account. The rules are itself the reasons.
Okay, sir.
Got it? Am I clear?
Yes, sir.
All right. Good question, anyways. Okay. All right. So this was the question, guys. I'm giving you one question so that you can try it on your own as well. All right. Please try this question. This is a little different, since this time it says that on which side these changes will be recorded when there is account. If cash account is decreasing, bank overdraft is decreasing, outstanding salary paid is decreasing, outstanding rent is decreasing, prepaid insurance is decreasing, capital by Rohan is decreasing, then how it will affect the account? On which side of the account we should reflect these changes? I'm giving you 5 minutes. I want answer within 5 minutes. If anyone having any problem with any item, do let me know so that I can help you understand it more clearly, and then you can solve it.
So,
Yes, please tell me.
so what is bank overdraft?
Bank overdraft is a liability. See, whenever you withdraw amount in excess of the balance available in your bank account, that indicate overdraft, bank overdraft. Let's suppose if you have a bank balance of 5 lakh and bank allows you to withdraw excess amount of out of it. Let's suppose bank have allowed you to withdraw 5,50,000 out of it because your credit worthiness in respect of in front of the bank is good and you are their credible customer, you are holding the current account. So therefore, bank sometime allows their customer to withdraw some extra amount, and the extra amount that you will withdraw, that will be considered as the overdraft. So in this case, if the account balance is 5 lakh and you withdrew 5,50,000, withdrew 5,50,000, that means overdraft is 50,000. I hope it is clear. And since overdraft is a kind of, you can treat it as a loan because ultimately you will have to return it to the bank now. And since it is a loan, this will be covered under the liability. Got it? Is this clear?
Yes, sir.
Sir,
Yes.
sir, could you please explain me what is outstanding salary paid?
What is, sorry? Outstanding salary paid.
Outstanding salary paid.
What is outstanding salary? Okay. See, what is outstanding salary? Outstanding salary is again, it is a liability. Listen to me carefully. Outstanding salary. Let me first of all explain meaning of the outstanding salary. Let's suppose salary of a, let's suppose there is an employee, Mr. X, who is working for me. Mr. X is my employee and his salary gets due on 30th of a particular month. But I did not make the payment to Mr. X till the 15th of September. That means salary is outstanding. If I have not paid Mr. X salary on 30th, which should have been paid on 30th, but instead I have the salary remain unpaid till 15th of September. That means salary is outstanding for 15 days. So this is considered as the outstanding salary. And obviously, because you have not paid salary to your employee, so this becomes a liability upon you. You will have to pay it sooner or later. You will have to pay it to your employee. So it is a liability upon you, right? And finally, on 16th of September, you discharge this liability. You pay salary. You pay outstanding salary to employee. So that indicate the liability that have occurred because of the non-payment of salary to employee finally getting discharged on 16th of September. That this basically means liability is decreasing. Since you have paid salary to your employee, that means liability is decreasing. Got it? Is this clear?
Yes, sir.
All right. Let me help you a little. The cash is an asset. I'm sure everybody already knew that. Asset. Bank overdraft is a liability. Outstanding salary is also a liability. Outstanding rent is also a liability. Anything which is outstanding is a liability. Outstanding means amount which remained unpaid. Prepaid insurance. If you have made payment of insurance on advance basis, that is considered as the prepaid insurance. Like if you have an internet connection and you make the payment at the beginning of the month, that is considered as the prepaid payment of internet. So prepay anything which is paid on a prepaid basis, on advance basis, that is considered as our asset. Prepaid insurance is our asset. Right? Capital by Rohan is obviously it is a capital. It has a special account itself. Capital is categorized under the capital itself. All right. Now question already tell us that these are decreasing. So that means cash is an asset and asset is decreasing. Tell me how we should treat it. Which side of the account it should be recorded on? Whether it should be recorded on the debit side or the credit side. Tell me quickly. Credit side. Cash is decreasing, so credit. Liability is decreasing, debit. Again, liability is decreasing, debit. Again, liability is decreasing, debit. Asset is decreasing, credit. Capital is decreasing. Tell me, capital is decreasing, debit. Got it, everyone? Is this clear, everybody?
Yes, sir.
Yes, sir.
Anyone having any doubt, understanding anything, please tell me so that we can.
No, sir.
Everybody did it correctly?
Yes, sir. It was correct.
Yes, sir.
Pratika and Zainab.
Yes, sir.
You
It was
did it
correct.
correctly or no? Yeah.
Yes, sir.
All right then. So, okay, so this was all about the rules of debit and credit based on the modern accounting. Now let's move to the different type of rule. We have one more rule, rules of debit and credit as per the traditional accounting approach. So let me explain that as well. We only have 5 minutes in the session. I don't think we will be able to finish it by then. Guys, is it possible if we continue this topic in the next class? Because it's only 5 minutes and we need to solve few questions based on it as well. And I don't think we'll be able to finish that within 5 minutes. So it would be
Yes, sir,
better
we
if we started afresh in the next class. All right, is it clear,
Yes.
everybody?
Okay, sir. Yes, sir.
Okay. All right, so just one thing, make sure that everything that we discuss in today's class, you guys revise that before attending the next session, because if you remember these things, it will be easier for you to understand the rules of debit and credit as per the traditional accounting approach. All right, so there is no homework. I'm not giving you any homework for today for the next class. Your only homework will be that you should just revise. Give it just 15-20 minutes, revise everything. All right, and then attend the next class. It will be very much helpful in understanding the next session. All right, so guys, thank you so much for attending the class. Ritika, Vanisha, and Labiba. We'll see you in the next class. Till then, take care. Goodbye. And if anyone is having any doubt, they can ask me before leaving the session. Or everyone else can now leave.
Thank you, sir.
Thank you, sir.
Thank you so much.
Thank you,
Bye.
sir.
Bye.